Hi everyone, Darko here for your daily trade example. This is a day trading video. I was honored to jump in for Vic. He was on a vacation, so I covered a couple of PMAs while he was away. So let's hear what I had to say about this pair, and I will talk you through it. Euro pound. When you are short-term trading, there are lots of levels that make sense to you. So in this specific case, this weekly significant neckline happens to be like a triple neckline, or it is a triple neckline on a daily chart. So that means once price gets down to this level, again, you could be end of week, end of day, or intraday opportunity trading this pair. So yeah, this is definitely a level that you should be watching, and there are lots of levels like this level in here, okay, which happens to be also identical with the daily, and just take it from there. So it all boils down to like, hey, how do I see this monthly candle closing? Okay, and now we are getting closer to the end of the month. It's like mid-month, so by the end of each month, you need to watch where price is at on a higher time frame for the bigger picture, and you need to visualize like, what is my bias for this month? And you could do the same, or you should do the same with the weekly as well. Like, hey, how did the weekly candle closing? Did we close bullish, bearish? Are we at support? Are we at resistance? How do I expect this coming week to be closing? And you just visualize that. And I remember doing this as a trader when I was struggling with it was like so close to stage 4, and I needed to go over that threshold to become a successful trader. I took a screenshot of things, and I visualized, hey, this is what I see in my head happening, and if I see this on my entry time frame, then I act upon it. So I had like instead of like writing things down, I take a screenshot. This is what I will be waiting for, and that helped me a lot. Like, I have endless of charts, like and that's something that you should be doing. So, and that makes you less reactive. That means you are just taking things out of boredom. Okay, there you go. So by the time I was recording this video, price was somewhere in here. Okay, so there is, and I point out this level for a potential trading opportunity. I was talking about a monthly candle action, and I also, what you could see in here, that is very clear that we had some structure damage on a daily chart. Okay, price is making a lower low, and then we make a higher high, higher close. We also see, we didn't see that on a weekly chart. It's more, you see that more clearly on your daily chart. So by the time price hits this level, which is one of the levels that you are watching, okay, there are several options. You go to your hourly chart and wait for an intraday opportunity, or you wait for a daily candle action. That means a daily ACAT. Well, in this specific case, we got both. Let me just clear my chart in here. This is a daily ACAT at a daily support, at a weekly support. Okay, so both signals were actually at the same time, the daily ACAT and the intraday opportunity. And if you are not familiar with my approach, a price breached this level, there's absolutely nothing to do. Price hit this level, comes down, we ranged. Okay, we went down another leg, and then another leg, and then at some point this happens. Okay, you have a natural stop that you are okay with. Price re-established with clear background space, very clear background space. And by the time you get this signal, this was a daily ACAT. It was also an intraday opportunity. The entry was in here with the low stop loss aiming to the upside. Okay, now once you get filled on this trade needed around the start, like from the entry to the stop loss was like around 20 pips. Give it an additional 15 pips or so, let's say 35 pips. Okay, the top of the move was around 190 pips. That's more than 5 to 1. Would you made 5 to 1? Well, it all depends how you manage it. I would say This level in here is definitely a level that I would have been watching. Okay, another level that is very significant is this swing neckline. Okay, and obviously this level in here, so, and this level in here. So it's all hindsight now, but the thing is that by risking 35 pips of your trade, this was at least 2 to 1, you know, 3 to 1, 4 to 1, 5 to 1 risk ratio trade. Okay, and this was, like I said, a day trading example, me jumping in for Vic and showing these levels, and obviously I did a follow-up for the clients as well, and hopefully some of them took that trade if that was in alignment with their game plan. Okay, that's it. Thanks so much for listening. If you have any interest in joining our service, make sure to send an email to vicnoble@forexmentor.com, and make sure that you support our social media by hitting the like button, so we will be doing more of these videos for you in the future. So thank you so much for listening, and I will talk to you soon. Cheers.